some of the common mistakes and misconceptions that we see with business funding, business loans, or finance agreements. One of the mistakes, sorry, is that people rush out. We saw it the other week. We were working on something with a client, and it's understandable. They want their money here quickly, and by doing that, rushing out, they might not be getting the best possible deal, or it could be that in securing a loan more quickly, it might be that they've got different levels of security on it. So you might, for example, be getting something which has got a large personal guarantee on it, or there's a charge against a property. And if you were able to sort of explore the market in more detail, you might not have had to have gone to that level of security that was on offer. Some of the misconceptions as well is that you can just borrow money. It's just cold hard cash that you borrow. And that's because in our personal lives, what we get offered to us from banks or other companies is pretty much just a cash loan to some extent. But there are lots of other facilities out there. We've touched on one, invoice factoring, which really allows you to access money on invoices that you've raised that you're not going to get paid for until, say, day 60, but you can release the funds on day one. And that's really useful because what you're doing there is you're tapping into your asset. The wider family of that is known as asset-based lending as well. So you may have a business that you've pumped loads of money into in from the outset, and you've got lots of expensive machinery and vehicles and lots of assets on hand. So your balance sheet looks really healthy, but you're not very cash rich at that time. Well, you can actually then borrow money against those assets. So the misconceptions are that really it's a very static, got to go and borrow money, but there are other facilities out there that we can tap into.